That would be $4,200 every single month, almost indefinitely. Hey, what's going on, YouTube? So today we're going to be talking about dividend investing and having dividend income pretty much for the rest of your life. Now, as a dividend investor myself, I love plugging in numbers, looking at them pretty much on a daily basis, which is why I actually have this channel here, so I can share what I see with you guys and we can have conversations in the comment section. So what we're going to do is take a look at my portfolio, see kind of where it's at, because I like to kind of do a little update, and then we're going to go into a calculator and plug in some numbers to see, how much we can be having pretty much for life when it comes to dividends, because I do love having that income. So we're here on my desktop right now with M1 Finance. This is my main dividend investing portfolio. And just to kind of clear it out too, I also do have a retirement account as well when it comes to just super long term, like even things beyond the next 15 years. So you can see right over here, our current value on the portfolio is sitting at $46,072. So if we look right now over the last day, we're down a little bit by $227. For the week, we're actually up about $222. And then for the month, we're actually up about $18.97. So of course, we see some fluctuations in here overall. And then in the quarter, we're still up about $15.95 with about $112 in earned dividends. And for the year, we're still up $7,295 with almost $400 in earned dividends. And then for the life, you can see here, we've earned almost $450 and about close to $8,000 in total gains on this portfolio. Some of that's already been realized gains. Some of that is obviously also dividends as well. So something to keep in mind. But yeah, this is where I love to kind of see my portfolio. You can see we started with $100 in this account. Absolutely love it. If you guys want to check out M1 Finance, which is what I personally like to use, I'll have a link for you in the show notes down below. They do have a bonus for you for using my link. It is entirely free to sign up, but it does also support the channel, so you get more free content just like this, which is really cool. It's a win-win right there for all of us. And so let's go ahead and kind of talk about some of this stuff, right? So the big thing is, we want to talk about earning some dividend income. Now, my portfolio is really focused on dividend growth more than current dividend earnings. So you can see we have like a growth pie right over here. And then if I actually go into my pies right over here, I'm going to show you what my current dividend yield is. So if somebody were to invest in the exact same pie that I have today, their dividend yield would be 0.965, which is pretty low. But my dividend yield, because of yield on cost and dividends being increased, it's actually a little bit higher than that. Normally I can check it, but the company I normally use to see what my current yield on cost is wasn't letting me upload or update my portfolio on its account. So it's kind of outdated right now, but it's around like 1.26 or so. I think the last time I checked was my current dividend yield. And I know some people, get a little upset about the whole idea of, well, how are you a dividend investor if you have, companies like Google, Amazon, Tesla, and Facebook that don't pay out dividends? In a previous video, I actually talked about how, companies like Facebook one day might be able to pay out some dividends or decide to do so, and owning the stock now will give me much better yields than people who are buying it later when the stock might be more expensive and all that other stuff in between. So, and if I'm wrong on that and they don't pay out dividends, my hope is that in the 15 years when I do want to actually be earning dividends and using that money from this account, then I can probably sell these for a really nice profit and then buy into companies like Realty Income that a lot of people like to get into. So let's kind of talk a little bit about investing for the long term when it comes to dividends, because that's a big thing. That's what we want to kind of talk about. I'm going to go on my spreadsheet right over here. So I put this together. It's a little off on the screen here, so I apologize. Let me see if I can zoom out just a little bit so we can get the full picture here. So it's cut off at the very bottom here, but I put this together. If you guys want a free copy of this, I will have it in the show notes for you. You just plug in your email and then I'll send you a copy of this. So right over here, you're going to see a couple things, but the biggest thing is, and it's right above me, it is the current monthly average for my portfolio. Now, for the amount of money that I have in this portfolio and what I'm getting paid out on average and in total is below average for a lot of dividend investors, because they go for that 4% rule. They try to go for, 4% dividend yield right now. Now, I've mentioned this as well in previous content pieces that, 4% is great if you need that money now. But if you're somebody like myself who maybe doesn't need the dividends today but wants it in 15, 20 years, going after the 4% yield might not be the best option. Now, I do have some stocks in my portfolio that pay a pretty hefty dividend. I think the highest dividend right now is new residential right here. So it's NRZ, and I'm trying to remember. So I know its current yield is around 7%, but I think my yield on cost, because obviously my average share price is a little bit lower than the current market price, I think it's closer to 8% if I'm not mistaken. So that's obviously pretty high. But that one is the only one that's anywhere close to that. And I think most other stocks in this portfolio are anywhere from 0.9% to like 2%. I think Home Depot is a solid one, almost 2% yield. I absolutely love Home Depot. But aside from the fact, a lot of these companies aren't paying high dividends, which is why for the amount of money that I have in this portfolio, I'm obviously not where some other people would be, because let me bring the calculator up here. So for $46,000, if I were to receive a 4% yield, let's say that's my average, that'd be $1,840 a year. Divide that by 12, that'd be about $150 a month is what I would be expecting, but I'm closer to about $3,801 as of the end of June. And I'm only doing that because I'm not adding up the ones for July yet, since I'm not getting paid out a lot of dividends in July. So I'm waiting for that to come in before I plug that number in. But you can see, yeah, there's a stark difference in there. Now, am I getting better gains right now from some of the companies that are paying lower dividend yields rather than getting paid that 4%, which is, a difference. What is that difference of? Let's see, 3801. Obviously, those are averages. So that $115 that I would have been earning in dividends, I could have taken that and reinvested it back into the portfolio, which is always a great thing to do. That's called drip, right? You take the dividends you've earned and reinvest them. But that difference, is that better than getting into the companies that are paying better dividend increases every year? We've talked about this as well. So if I go into seekingalpha.com, so let's go ahead and check out a company like Microsoft, for example. So Microsoft doesn't pay a very good yield. Right now they have a 0.81% yield. But if you look, let's see, their dividend history, the last time they increased, so last September, they increased their dividend by almost 10%, which is really huge. So you're getting 10% more on your money than you were prior for having owned it. But then companies like Realty Income, which is very popular, and I still like the company as well. But when we take a look at their dividend increases, which is a little hard to do because they change it up by a little bit every couple of months, so it's always a tiny bit different. So I think the newest one right here, it was a 0.02 increase, and then the time before that, it was also a 0.2 increase, and I think their average increase per year, because they do so many tiny ones, well, their 5-year average is about 3.79, but I think their 3-year average is closer to 2.5%. So what that's saying is that even though you're getting a 4% yield on your Realty Income, the average growth rate is kind of keeping up with inflation and just slowly growing, where something like Microsoft, I'm getting leaps and bounds increases year after year, which is going to help me increase how much I'm going to be earning, which is good because I don't really want to pay the taxes on that dividend income right now. I'd rather pay it down the road as well too. So let's kind of take a look at some of these numbers here. Now, I'm going to give some examples for people that are maybe not in my position where, I'm putting in this money now with some intent to have it growth focus on the dividend income versus the dividend growth focus that I have versus people who are already getting the 3 to 4% dividend income today. Now, again, either way you go, it's not really a bad thing at all, but let's just go ahead and say, so starting principal is about $46,000 here. Annual dividend yield, we're going to go pretending and say the person that we're going to be talking about here today has a 3.2% yield. It will be in a taxable account. Let's say every month you can put in $1,000. And then the expected annual dividend increase, this is important. So because we're going to go along the lines of saying we have companies in our portfolio that are paying high dividends, they're most likely not going to increase at a higher rate like they do with like Microsoft or Apple or some of these other big companies. So let's go ahead and say that we increase 3.5% every year. Let's say we do distributions quarterly. Typically, companies do that. Dividend tax rate we'll leave at 15%. And then expected annual share increase appreciation, we're going to do maybe 4%. Let's just say 4% a year. They They have the DRIP right over here, stands for Dividend Reinvestment Program. Most companies can do that. M1 Finance, the company we showed you right over here that I personally use, does have the DRIP. It does auto investing right over here, so it allows you to have your money get back in there and start working for you. And I do, again, recommend them. I'll have a link in the show notes down below for you if you want to check them out. I'll also have tutorials if you want to see how to get it all set up like this. You guys can do that as well. So let's go ahead and see this right over here. So DRIP is on. So we're going to show you 15 years. Let's just go 15 years first. So obviously this is with the assumption that you have $46,000 already in there. Obviously you could play around with these numbers too. That's always what we like to do. That's what I do almost on a daily basis over here. So it's going to take a moment, and we're going to have some ads pop up here in just a second. So they're going to kind of obstruct our view. So you could see in 15 years, this portfolio will be worth nearly $500,000. Obviously, these are rough estimates, just kind of keep that in mind. But check out the annual dividends. Annual dividends, of course, that's perfect timing. So let's close that off. So annual dividends is $25,091. So obviously, that is going to be a really healthy amount if we divide that by 12. So that'll be on average about $2,090 every single month. Obviously, if you're getting paid quarterly with some of these companies, you're going to have to consider that as well. But that's the way it can go, to be able to have $2,000 a month. Obviously, if you pull this money out, you're going to kind of keep around that income stream every single year. Because if you're reinvesting the dividends, like we talked about, the DRIP, that's what's going to get you to this annual income. Now, I'm going to show you some really cool stuff. So let's go ahead and say we added an extra 5 years to this calculation. So before we continue on with learning about our dividend income, I actually want you to find ways to save more money, to be able to invest more into the stock market and earn more dividends. And one great way to do that is to refinance your student loans. You can see right over here with Earnest. If you didn't know, refinancing your student loans can be entirely free, so it doesn't cost you anything and can save you thousands of dollars. So right over here, you can see it takes about 2 minutes to potentially get your rate and see how much of an interest rate you can cut from your current student loans and save every single month. And again, you can take that money, reinvest it into the stock market, and earn those dividends. So I'll have a link for you in the show notes down below. It does help support out the channel, but the cool thing is it gives you a $100 bonus for using that link and refinancing those student loans entirely for free. Now, with that said, let's go ahead and hop back onto the content and learn more about dividend investing. So again, $46,000 principal, 3.2 average dividend yield as of today. That's not my portfolio, but just this example portfolio. Putting in $1,000 a month, dividend increases expected to be 3.5%, paid out quarterly. And then we have a share price appreciation of about 4%. DRIP is on, so it's reinvesting those dividends for 20 years. I was just waiting for that. So you can see here, in an additional 5 years, your portfolio will be worth $777,000 right there, and your annual income right there pretty much doubles right there for dividends. So you would be getting $50,000 a year in dividend income. Now, obviously, if you take that money and reinvest it, it's going to keep it growing. But if at that point, let's say in 20 years, you're like, you know what, 50,000, I'm pretty solid with this. I like this amount. Obviously, that was double what we had before, but let's just get the exact number right over here. Divided by 12. That would be $4,200 every single month, almost indefinitely. Obviously, there are ups and downs in markets, so things that you have to really consider about that. Sometimes companies cut dividends if you're buying individual stocks, or if you're buying into an ETF, you're a little bit safer on that end. But $4,225. Now, let's go ahead and say throughout this whole journey, you actually did not reinvest those dividends. I'm going to show you how impactful that is. So we're going to go back to the 20 years, but no DRIP. And let's see exactly how this impacts your portfolio at this point. And we'll also maybe mess with the numbers of like starting at 0 and then kind of going from there, because I know not everybody has $46,000 to have in their account all at once. So right over here, check this out. If you pulled all the dividends that you were earning for the last 20 years, so if you started with the account that we started with, and you pulled those dividends and you didn't reinvest them, like you had them paid out and then you would withdraw them and use them to pay bills, which is totally fine if that's what you need to do, your ending balance would be a little under $500,000. And then your annual income after 20 years would actually be around $30,000. So there's a $20,000 difference for having reinvested your dividends back into your portfolio, which shows how powerful that is. But again, I mean, that's still a good, healthy amount of money coming in for having to do pretty much nothing at that point. You're just earning this money. So, if you want to, have dividend income for life, essentially, what you got to really do is kind of pick a time period of saying, okay, up to this dollar amount that I would make annually, I'm good with that. I don't need more than that. I'll start pulling that money out, because the second you start pulling those earned dividends out of your portfolio, you slow its growth down. You don't stop it indefinitely or anything like that, but you do slow it down. So if you really want to see that impact, I would say having that money reinvested really grows it a lot faster. But it's up to you and what your, annual income is going to need to be, or how much you want to earn every single month in dividends. I have goals I've talked about here on the channel where I want to have it. Obviously, $1,000 is great, but I'm looking more close to like $5,000 to $8,000 a month in about 15 plus years or so. Not with these numbers, but with the different numbers that I have with my portfolio and what my goals are and what I'm trying to reach for. But if you want to follow along, make sure you hit that subscribe button down below so you guys can see when new videos come out. I'll keep you guys posted with, how my portfolio is doing. I like to showcase this because I feel like when I go through this process, it helps a lot of people out. I mean, I grew the portfolio from $100, and as I kept learning and growing, I kept investing more, felt more confident, and being able to invest into what I wanted and how I wanted as well too. But again, it all starts from just going through that process. So what I want you to do next actually is click this video right over here on the screen so you can keep on learning and growing when it comes to building up your dividend investing portfolio. My name is Dennis, and I'll see you in that next video.